ship. My dreams may be futile, but this you say, well, my dreams may be futile, but Bitcoin bull keeps charging away. Oh, you see, my Bitcoin bull keeps charging away. I'm not the bubble. I'm not the bubble. I'm the pin. I'm not the bubble. I'm the pin. I'm not the bubble. I'm the pin. I'm not the bubble. I'm not the bubble. I'm not the bubble. I'm the pin. I'm not the bubble. I'm the pin. I'm not the bubble, I'm the pin. I'm not the bubble, I'm the pin. A Bitcoin bull is all I got left. Sold my house, go no less.
You're listening to Any Observation, the best NFT, crypto, and gaming podcast ever. With your host, Anders Bjork.
And we are here. Whoa, it's another day. It's another cold day in my office. It's 30 degrees Celsius right now in my office. Very warm, very nice, very sweaty. Today I'm joined with LiteLiger, or by LiteLiger. Cool guy creating content. I don't know how much I should introduce him. Okay, LiteLiger, hi. Who are you and what type of content do you create?
Well, I do create crypto content, and that's a pretty. It's quite a lot of variety in a lot of ways. So I do NFTs, altcoins, guides, reviews, even scam investigations. I mean, I kind of delved into pretty much all the crypto niches, except I've never really done like TA.
Yeah, so no TA. That's the boring thing, though. You have done a bunch of, and for anyone wondering, LiteLiger doesn't go on camera, not on his content, and not in this interview. So while we're talking, at times I will probably play some Clash Dome games. If you don't know what that is, it's games on the Wax blockchain. You can go and you can play a bunch of different games, and my favorite right now is the rug pool game. Also great name. But yeah, so I don't know, when I found you first time, you started making some videos on Wax projects 1.5, 2 years ago, something. Long time ago. I don't remember when it was.
Yeah, I think Wax was probably, I can't really remember, man. Like, Wax was probably when I first really got into NFTs. And I probably got into NFTs back in 2018. If you know the project called Ethermon.
Yeah.
Back then, you didn't have the ERC 721 standard, if I remember right. So they were not like real NFTs, or they were using some type of a different token standard.
Yeah, and
so that's when I was like, I first learned about NFTs, and then I kind of got into Wax, and I think the was Garbage Pail Kids, the second sale where I got in, probably, you know.
So that was the Tiger King one.
Yeah, or it might have been a bit after that, but I remember having those cards.
Yeah. Yeah, and I'm missing my shots. But so like that's a long time ago, and those NFTs that was before the standard on Ethereum, if I recall correctly, the images was usually as the web link.
I have no recollection of that because I wasn't using when I was, I think I got introduced to Ethermon through a giveaway or something.
Yeah.
And back then, was it even OpenSea around even back then? But I don't remember like using OpenSea or anything. So I can't really remember I wasn't very tech savvy yet at that time to go through the Etherscan and look at all that stuff. I was barely handling MetaMask.
Yeah, I guess. Like, I didn't even care much about NFTs at that time. I saw them and I thought they were stupid. What was your first interaction with them? Did you think it was a great, awesome idea, or what was the idea for you?
I don't remember, man. It's been such a long time.
Like the first thing for me.
But I can tell you this: I never ever questioned the technology because, like, even today, you are gonna find people on Reddit like, "What is the point of these NFTs, man?" And like, people don't get it. People don't get it. But when I think about NFTs, I see the ticketing industry being revolutionized. Like in the future, all your hockey tickets, concert tickets, whatever event or venue you're going, those are going to be form of NFTs that you get like actually sell. So let's say you get sick. I remember this was like 10, 20 years ago or 15 years ago. There was a concert and I think I got the swine flu. Yeah. And I couldn't go into the concert. I was really excited for it. And obviously I couldn't sell those tickets, or there are ways to do it, but you have to like go outside and meet somebody, and there's a bit of a process, there. But NFT technology is going to make that so much easier, and it's obviously going to be introducing like a lot more liquid market, so to speak, where you can just liquidate those assets, because finding buyers can be hard. I mean, in some countries, I mean, in America, you have the Craigslist and other places where you can buy and sell stuff, but it's sometimes hard to find, buyers for certain digital goods.
Yeah, and also like tickets. You can buy on a secondary market if you have enough time to send them. Usually they are a physical piece, and you have to trust that they are legit. And there's a bunch of issues with that. Like the secondary markets for tickets it can work if it's a closed system, but usually it isn't.
Yeah, I mean, the NFT, what it fundamentally fixes, and crypto in general, with smart contract, is removing the counterparty risk. Because I actually just bought an access to DAL-E2. Do you know what that is? Yeah. So that was it was a problematic process, because I had to first trust this guy that he actually had like, the actual product.
Yeah.
And then we like agreed, okay, I'm gonna sell half of the money up front and then half later after we set it up. But it was like it was a hassle, because like changing ownership, if you want to like sell your Steam account, which has actually a lot of value, but it's a really hard process because it's attached to an email, and then you have to like, I guess, to change the email of it, and there's a lot of like, and dislink your 2FA. And there's a lot of hassle. But once something becomes just like an NFT, which serves as some type of an access token to whatever service you're using, it's just going to make things a lot more easier.
Yeah, for sure. And a bunch of these secondary market trades are not even allowed in closed ecosystems. I mean, on World of Warcraft, you are not allowed to sell gold and things for real money. People do it. It's a big market, but you can't do it. And
and that reminds me of the RuneScape situation, where people were so poor in Venezuela that grinding on RuneScape was making them more money than like doing actual jobs there.
Yeah.
And then Jagex, I don't know how to pronounce that, is the company that's making RuneScape, and they basically just banned these people. obviously. And I kind of understand from certain point of view that you don't want people like gaming your system, but fundamentally when you have things like the gold in World of Warcraft, or gold in Diablo or somewhere, and these are like famous examples where that money is being sold, they are all like, because once there is like actually monetary value, that might curve down the actual inflation. So World of Warcraft has a fundamental inflation like issue. Like every time there's a new expansion, like the actual gold becomes less worthless, and like that's when usually people like create new characters. So like the very early items and resources like copper or something like become very valuable. So the resources actually go up, but the gold price like just inflates. So this is, I think, a good example of like Path of Exile. Have you played that game?
I have, but not a lot.
Yeah, so in Path of Exile, they decided that because the inflation was such a big issue, and we can obviously agree, like, well, how much of an issue that is in general in a big games, it can be, I guess, to a degree. But they just like removed gold altogether, and they just like have this barter trade system. I don't remember how it works, but it's just like items are used to basically repair your items. So they removed the gold out of the equation, and that was their solution to basically to tackle the inflation inside the game. So I fundamentally think that it's good to have NFTs inside the games or tokens inside the games, and this maybe will like fundamentally, like the option of having like some black market people selling you gold is a lot worse than having the actual game company just support an ERC20 token or whatever the equivalent would be on their own chain, because that would just reduce less scams and everything. But obviously there's a lot of legal problems there.
Yeah, and like if you have a closed system like a game, if someone steals your stuff, there is a way to get them back. If someone steals your NFTs, it's very complicated. Do you think they will fix that problem in some way, or what's your take on that?
So, I mean, what do you mean by stealing NFTs? The company stealing it?
Someone sends you a phishing link and suddenly all your NFTs are gone and you don't have them anymore. All your game assets are gone, you can't do anything. If someone does that for you in a game, there is a way for them to help you, but it isn't really with its tokens and NFTs.
Well, that's why I'm kind of it's a double-edged sword. So on the one end, you kind of want the gaming companies to have their own chains, maybe side chains of sorts, which they have basically the whole control over, with some flexibility there, because I don't fundamentally think that there's sustainability to run a full game ecosystem on like Polygon or whatever. Like that's just not possible. It's just going to be curving the fees much high. You just have to have a system or a chain which is controlled by the game or a gaming company, and then there's a couple of games that utilize that. It was actually one project that I did talk about called Oasis in yesterday's video, I think I did. So I think that's going to be the solution, that there's going to be one blockchain technology, and which allows you to create side chains, and then every game is going to be serving as their own side chain to avoid congestion and fundamentally just allowing people to trade. And then there's going to be that token that is the de facto gas token in that network, or there may not be even a gas token in the future, depending on if you're going to be using a different technology like EOCO. And
or Antelope, as the new name is. It just got rebranded. Yeah, EOSI got rebranded because Block 1 is out of the picture. And it's rebranded to Antelope since yesterday.
Okay, I have to look into that. Have they revealed the logo?
They have the website and everything. Antelope.io. Yeah, they have a logo and everything. So, like, it's basically a collaboration between EOS, Telos, Wax, and the UX network. and they are together putting in funds to take EOS.io to the next level and forgetting all about Block 1, forgetting about all the money they took and never really gave enough value back to the community. So this is their way to get away from Block 1 as far as possible while working together, multiple chains, and building a full ecosystem. And I think that's probably a good thing.
Yeah, I'm not super sold on the technology of EOS.io because the way it's great for the end user, but the developer has to like store a certain amount of RAM and those resources, which are constantly making you have cost to running the smart contract. And I don't know how sustainable that is unless your idea is to just run a couple of like big dApps and then there's nothing else.
I don't know if I see it in the same way though. And obviously I'm biased since I work with it. But like, the positive thing is that a dApp can actually pay for the actions by the user. So the user don't have to put up a lot of funds. They can quickly get into something and they can get started. On Wax, you stake Wax tokens and you can use X amount of transactions every day. On EOS, you have a transaction fee now, which is cheaper but similar to all gas fee chains pretty much. So they have abandoned using EOS as the chain token in the same way as other ones. And Ultra is doing the same thing. Proton is attacking it in a different way where you basically have to rent resources, but you have a few free ones every day. I don't know which one is best or if we even have a best one yet, but I know like on Ethereum, paying a gas fee for $300 to buy NFT as we did last year, that's crazy.
Yeah, but that's kind of different because I remember when I was talking about creating a staking contract on Wax and people were telling me that it's going to be costing around like $2,000 or something like for the resources. And I mean, it depends on like how do you code it and everything. So it's if there's going to be funds and allocations, treasuries and things like that that give money to the dApp developers, I guess that's fine. But and you know, it's a trade-off, and that's what I'm always advocating for multiple different chains. You can have chains that are extremely centralized, and you can have chains that are extremely decentralized, and then you can have like these EOS.io style chains which have a different type of a tackle into this like scalability and everything. And you know, from the user point of view, it's a great system, right, for what Wax and others have done basically, because it's very affordable to transact.
Yeah, it is. It is a little bit complicated for some people, but I think it's easier to get going on Wax than on a lot of other blockchains. Still, it can be better since now it's a bit more complicated to get your first account and get going. But then to buy NFTs on Atomica, all you have to do is just go there and you don't have to care about resources. You don't have to care about anything. Just create a free account on their website and then start going. And that's like the barrier to entry is very low. Oh, I just killed myself.
Yeah. Isn't like Atomic Hub like fourth largest right now? Like I think Ethereum being the most popular NFT chain right now, followed by Solana, and then maybe Cardano, and then Wax, right?
I don't know actually.
I mean, it's hard to really measure. I mean, we know that Wax has incredibly lots amount of transactions taking place on like every second.
Yeah,
and so there's different metrics to kind of look at it, and you're just looking at dApp radar. I think these are kind of off, like everything that they show. But
yeah,
I mean, I also do not think that volume is the best way to measure like how big something is. I kind of look at, okay, how many unique transactors there are, because in the case there might be like millions of volume, but it might be like a couple of whales. money laundering their CryptoPunks. So we don't exactly like know specifically. It's hard to like measure like what is the exact volume or which metrics we should follow in terms of looking at the popularity. But I think I like Atomic Hub's numbers. Like there's a lot of unique transactions and there's volume, and obviously different collections are all having a certain amount of volume. It's not just like the top 20 or something.
Yeah, in like the positive thing is there's a lot of like trades of low value items since there's no transaction fee. You can sell and buy things for a very low value, but it also means like the 7-day volume on Atomic Hub is $500,000, and on a lot of the other NFT marketplaces, well, they are way higher. So yeah, there's a lot of things, but I don't know. It's a good place to start. So out of all the NFT marketplaces and chains, which one is the favorite for you?
I like LooksRare. I think that's my favorite because they have solid tokenomics. Okay, so it's something that you have an incentive to trade there, and well, the incentives are there. The problem with OpenSea or Atomic Hub is that there's not exactly incentives to trade at these platforms. I don't know why, but I know why OpenSea hasn't created a token, but I don't know why Atomic Hub hasn't. Like nothing stops from Atomic Hub of introducing a rev share token. I don't know where they're registered at. Maybe there's some legal
Germany.
hassle. Well, I think that should be a pretty much a good country. But I mean, that could also build a lot of interest for like Wax in general. I mean, I think the Wax the DeFi system that they have created is actually very brilliant, and
a lot of people don't like it. So
well, that's kind of weird because I mean I understand that it is kind of attached to a centralized identity entity, but fundamentally when you look about this, when all of these CeFi platforms now crashed, so many, at least like 5, I think 5 or 6 have closed, withdrawals.
Yeah.
And 2 have gone bankrupt, and 1 got purchased by FTX Voyager. So now I lost what I was thinking about.
The Wax DeFi, why it's good.
Yeah. So the risk is super low because the idea of Uniswap LP pool being hacked is super low. That the chances of that happening on Ethereum, that is probably one of the most robust and vetted smart contracts out there. I'm positive of that. So the idea of getting hacked there is very low. There's pretty low risks here because Atomic Hub is, and one of the things I also like about Atomic Hub is that they seem to have a pretty constant revenue. So it may not perform usually, like at least what the statistics I watched, like at least the amount of transactions have stayed relatively the same throughout all the months. And, it hasn't deviated super radically. Like, I think OpenSea, like back in 2021, had maybe 5% of its volume that it has in 2022. And when the crash happened, it dropped down 65% or something. And that's the amount of use. The volume dropped by 65%, and that's what every publication reported. But that's not a very good metric to look at because actually the users only dropped by 30%. So there were a lot of these like articles which said, yeah, the NFTs are dead now, the fad is over. But when you actually look into the hard number of the users playing around with NFTs, that hasn't really declined, even though the volumes have.
Yeah, and that's a way more interesting metric, which can also be faked, but but at least it's better. Because like I've always thought that all the high value trades, they are good for like clickbait, but it's not really what's interesting. It's what you can do with NFTs, and that like the masses, what they can adopt, what they can do. That's more interesting than someone buying an NFT for $100,000 or $1 million, even though that's better for media coverage.
Yeah, well, it was same time before I kind of got into crypto. I was very focused on esports, and all the major mainstream narratives were always focusing around, oh, look at this price pool here. It's like people are competing for 10 million or 15 million or 1 million or something. It was not actually like, it was a very superficial take on like the actual event or, you know, the tournament itself. They were not interested in the storylines or the actual games themselves. They were just interested in the money. And that's kind of one of the problems also still in crypto, that there are a lot of people who have a misconception that it's all about the money, but fundamentally it's a form of a ideology and kind of like a political movement at the same time. And also it's a technology. So there's so many variables into it, and also into NFTs. So not just about flipping them, it's about kind of like getting the user user control back again. Because when we transition to the digital gaming, when you started to buy games from the PS Store, from the Nintendo Store, whatever, we lost a lot of like value there, because once we buy those games on those digital stores, we're not able to flip them. And ironically too, the retail prices for those games are actually lower on the shelves than they are on those e-stores, which is totally crazy to me. So I tend to actually buy a lot of the time the physical copy, because I know that I will be able to flip it later. It may not be for a high amount, but it will be worth something, at least better than a zero.
Yeah, but you can't always even do that. They lock it down to your account or email and things like that as well. So it's like a digital license in a physical form.
Yeah, but now you're talking about PC games. Yeah. But like if you buy a console game, you can flip it.
Yeah, probably. I don't play console.
Or a console.
Yeah. Then like as Modis said, like the biggest interest for NFTs is the utility of them. And what's the best utility NFT you have seen so far?
I think there are quite many different types of NFTs we both have seen. There's obviously those ticket things. I don't think there's any like very legit platform that has done that yet. I know there's some real estate stuff, but most of those actually don't require an NFT. They just need a token to represent the fractional ownership of the house or the rent shares. I invested in a couple of those. And then there's the NFT, which is the tangible NFT, or wax. I mean, what they are called in wax, whatever. What are the ones that are connected into a physical copy?
Yeah, the VIRL, VIRL.
Yeah, so there's
IRL.
Yeah, so some people use different terms.
Yeah,
but that's another one. That's not perfected as possible. Maybe in the future there will be like some type of a decentralized factory of sorts, which will give out like more flexibility on the shipping and when it's being shipped, and and some other elements. And maybe like the shipping cost can be paid in crypto or something. They're like a decentralized way to send a package. So there's a lot of like different utilities for NFTs, but I think the ticketing industry, and obviously what Ultra is doing throughout the games, owning the games as NFTs, is the most important thing that's going to be happening on the gaming side. And I mean, there are some other ways to think about. You're going to have your marriage certificates as an NFT, well, I don't. Yeah, maybe you don't want to trade that. So
I saw someone posted a meme about that the other day. Was let me see if I can find it quickly. It was no, I don't. But it was on my Telegram chat somewhere. But basically, like today we lose. Yeah, here it is. I can get it. I think the right monitor. No, I can't. Whoa. Whoa. There it is. It's 2049, code is law, and my husband of 27 years died. But our NFT marriage certificate was stolen, and now legally his wife is a 19-year-old Bangladesh man who's going to take my house, and a bunch of Redditors tell me it's an expensive lesson in keeping your seed phrase secure.
Yeah, I don't. You know, the problem that some entities are delving into is that they want to tokenize everything.
Yeah,
and that's not really. I don't think that was the original idea. I think it just makes sense to have that tokenization in terms of tokens or NFTs with things that you tend to transfer or trade that may have like currently a counterparty risk, and that is like digital goods or selling. Maybe you have like a DLC code for some type of game in Steam or something, and right now when you sell it to G2A or whatever, there's a counterparty risk, there's a middleman fee, yada yada yada.
Yeah.
So I think where in the areas where we have that counterparty risk or a lot of middleman culture, that's where we basically need the NFT technology the most. But this idea of these profile picture collections, I don't think that they're going to be staying around for that long time. I mean, we're still seeing them being made.
You think they can add
I am
digital
launching
utility
one
to make the like a digital utility to the profile pictures enough to make them interesting? I mean, the crazy price, I think that's going away. There will always be people that pay an insane amount, but I think there are like you could have a profile picture project that is interesting enough if you connect it to enough digital utility. I don't know exactly what that would be.
Yeah, so I mean, for example, Twitter has an NFT avatar system now, so that's a one form that the NFT can bring value. Telegram could basically implement something in the future. YouTube
and Instagram is doing it.
Yeah, if Instagram is doing it, that's probably meaning that YouTube is going to be following suit very, very soon. So, I mean, that's definitely something that can happen. But like in Steam, for example, you have these custom borders and things like that you can buy with the points. I am not personally super interested in them. Even though they kind of look cool, I wouldn't necessarily pay for them. So it's kind of hard to say, you know, will there be enough demand? And yeah, obviously, like there are PFP collections which have, you know, done 3D renditions of their profile pictures, and so they can be brought into the metaverse. There can be utilities like that, but usually, in order to do like 3D models, even if it's voxels, that's going to be requiring some money and capital and modelers. So it may not be something that every, you know, PFP collection can achieve. So
yeah,
there will be those very premium PFP collections like Bored Ape Yacht Club and a couple of others which are going to be around and, you know, having a form of a reputation, which are going to be like they will like transitioning to become, and Bored Ape already is a form of an IP. Like it's not like big as Mario or Sonic, obviously, but like that's what they're kind of going for.
Yeah,
that there's this sort of a internet collectible that's going to be integrated in a lot of things in the future.
Yeah, but I think they can have value the other way around, where you have an actual project, something that has a user base, something that's interesting, and then you have some kind of avatar connected to a profile picture. Like, say a big MMORPG. Your avatar is a profile. You can get a profile picture from that. That makes more sense than having a profile picture that then turns into a game.
Yeah, of course.
Yeah. So you have made videos on DeFi, and I'm one of those people that think DeFi, as most people know DeFi, which is liquidity pools and staking and things like that. I'm not the biggest fan of that. I don't like liquidity pools based on the risk they have, since you have to have 2 tokens, and there are those that are less risk, but I'm not the biggest fan of that. And you have been creating content on different DeFi protocols and things. So what's your take on DeFi and the ecosystem that exists and what is coming?
Well, nobody likes impermanent loss, and obviously when you do like farm tokens, that's where the biggest danger is. But if you're going to be choosing a very solid pair, let's say a stable coin with like Ethereum, that's relatively safe. And there's obviously like stablecoin pairs that you can do also, which are both dollar. So those are pretty safe, and you can sometimes even farm with those. But I personally like single asset lending.
And for someone that, wait, if we stop there, you say, and you can farm with those. For someone that doesn't really follow DeFi or just an NFT gamer or an NFT collector, what does that mean?
Yeah, so basically when you provide 2 stable coins into the liquidity, you will get an LP token, which is a representation of your position in that pool. And basically that LP token can be staked in exchange for rewards. And that reward can be a farm token in certain farm site, or sometimes it can be other things. It may be a certain protocol giving out like rewards or grants that they have received in some more established coin. Like let's say Optimism has now bootstrapped a lot of DeFi protocols with Optimism rewards for participating on those DeFis. One example that I've been participating is on Pool Together, which is it's a no-loss decentralized lottery. So you basically buy tickets with USDC, and with this you will have a chance to win one of the lottery awards. So like in real lottery, as we have probably very similar systems in Scandinavia, you have low rewards and then you have the jackpot reward. But unlike the real lottery where you lose all your money when you don't win anything, you don't actually lose your USDC. It just stays there for the next round.
So what, like, how can they generate a profit if there is not someone that is losing?
Okay, so what happens underneath is that they are lending that USDC that is being generated to a lend, like Aave.
So instead
so that's where the rewards come from.
So instead of having a guaranteed reward, you have a chance of getting a bigger one because they take the pool and they lend it, and then they have a lottery of that instead.
So basically all the lending rewards that they get from Aave are being then raffled among the winners. And obviously more USDC you have, more lottery chance you have, basically. And it's happened on a daily basis. And what they are doing now is that I'm getting OP tokens when I'm actually providing that USDC. So I have a chance to win at the lottery, but I'm also getting OP yield at the same time. And I think there's still time for like 6 or 7 days or something that you can participate on this. The yield is actually pretty good on it. OP token obviously has gone quite significantly down in the last week or so. Actually managed to sell it almost at the top, so I'm kind of happy about that.
That's good. And okay, so based on what happened with Luna, the crash, like Luna was the DeFi platform for the majority of Twitter, and it has damaged probably more crypto people than any other crash before. Do you think that will have a negative impact on the DeFi, or is it a positive learning experience in the long term? Well,
the problem was that it wasn't like the idea and the concept wasn't actually sound, because so the idea that you could burn Luna to get USD or other stable coins that they had the Swedish krona, they had the Mongolian, I don't know, actually remember what it's called. I mean, Thailand baht and whatever. They had all the currencies there, and you could swap them between each other by burning the other. Now that's a good mechanism. But then somebody created this thing called Anchor, which was giving people yield on their USD, which had no it was not based on any logic. That the rate was not like, because initially I thought what was happening is that it was using the USD to basically convert it into Luna and use those staking rewards from Luna to basically give that yield. But it wasn't based like that. So the Anchor gave basically a yield which was not based on anything. And that's why it crashed fundamentally, because the yield was so high on that USD and it became debacked because of it. So I guess the Anchor's rate was somewhat based on the staking percentage of Luna, which was 11% or something. But they kind of fucked it up. Anchor was the main reason that this whole thing basically collapsed.
Yeah, but Luna, the guaranteed design to swap back and forward was also flawed. Like it wouldn't work if there was a quick drop in price, and that's what we saw. The whole logic behind it crashed.
No, it crashed because of Anchor.
You think
Anchor
it's only because of Anchor?
Yeah, it was everything Anchor to do. I mean, if Anchor didn't exist, this problem wouldn't have come to be.
You don't think so? I think it would happen regardless, but the question is when, not if. And I didn't expect it to crash as hard though, because then I had money in it, and I expected to have a drop in price at some point, but I did not expect to have a crash like I experienced, or everyone did.
Yeah, so there's a lot of so many different variables, and I'm not like the best person to explain, but what also happened is that they had Bitcoin funds that they had bought, and they didn't use that Bitcoin to basically buy up the Luna's price. They actually hold on to that Bitcoin money. So basically the devs were basically conspiring to make Luna fall and make the people who are engaging in derivatives to basically make shit ton of money. And there's a lot of like shady elements into the company who they also like loaned this massive amount of Luna or USD to one entity, and they were kind of like also behind like making it crash. Like there were a lot of variables into it, but we still have Luna Classic, which they have actually like a decent like plans to make that meme coin recover right now, because they're going to be introducing a burn tax to all transactions.
You think it will ever recover?
I mean, well, Luna Classic, I don't know about Luna Classic, and then there's obviously Luna 2, which both, by the way, are getting compensation. So there are some people who have said that they lost all their money, but that's not true, because there is a reparations being issued. The first drop was already given, and in November, there's going to be the second batch, which I think is 50% or something that is going to be coming back. But I don't have any faith for the Luna 2 to recover to any stage, to be honest, because the whole plan was revolving around that whole burning mechanism. That's what made it kind of unique. The Cosmos WASM technology, in my opinion, kind of has too high fees. So it's not like there's no way for them to scale it higher, for example. But Luna Classic is super cheap right now. And once they introduce a 1.2% burn on every transaction, that is going to be split multiple ways. Some of that money is going to be going into developers and dApps and also a DAO, but some of that is going to be burned. So that might be a way for this meme coin to basically rocket. And I'm at least I'm betting on that to happen.
And you call it the meme coin?
Yeah, because I mean, the community. If you go into talking about the Luna Classic community, they will not say it's a meme coin, but that's where it's kind of, I think, where it should focus, in my opinion, because like you can build. I mean, everything about their concept is going to be heavily revolving around building dApps that will burn more of that Luna Classic. That's the only kind of thing that they can currently do, and an avenue, but I don't see like any killer dApps like coming out of that ecosystem.
There was a lot of dApps coming. There was a lot of companies launched to support Luna, and like I think the reputation is at such like is it so damaged that I don't think it could ever recover. Like it is such an uphill battle. I don't see how the Luna brand could ever recover from the damage it did to people.
Yeah, but that's exactly the same thing with EOS, that they have to kind of rebrand the whole project, and that's something that they should have probably done with Luna. Instead of calling it Luna 2, they could have like maybe named it something totally different.
Yeah.
And then kind of start from there. But like the Cosmos, the Luna doesn't have anything proprietary technology outside from the burning Luna to stable coins, whatever. Any Cosmos chain can do that right now. Like, so that's fundamentally kind of like their problem. And also, I don't like the fact that they are trying to revive in the Luna Classic. They're still going to be having that same stable coin mechanism. And there they will have the USTC, so UST Classic. And I've been talking in their Discord and saying that it's a bad idea to go with it because it kind of creates a fear for similar type of event happening. So instead, you could become the first smart contract blockchain that has a deflating mechanism alongside with Ethereum. That would be at least one form of a selling point, but they are not excited about the idea.
Yeah. I don't know. Like, I don't know. I was kind of bearish on Luna all along. I went into it because it was a good opportunity, a high risk, high reward, and it didn't pay off for me. But other things did.
I mean, I was kind of like very fortunate because I got into Luna when it was at $6. I also got into Solana when it was $11. So
yeah,
I got both of these coins. You know, I got a pretty good prices, and even on Cardano to extent, not as much as on those other two, but I did I didn't manage to sell any of that Luna. Probably I sold some UST. But I mean, I maybe had like 5,000 of holdings in Luna in total. I think that's what I remember. But
at the peak,
I thought it would be recovering. So what I did, I had maybe 5K of UST at that time, and I bought with all of that. I bought more Luna. So
yeah,
that was the wrong call. Should have exited, but I didn't. You know, back then, hindsight is always 2020, but I didn't have all the information at that time.
Yeah,
because you would have expected Do Kwon to basically bail out the project, but obviously he didn't. They didn't use the Bitcoin. I think it's been well recorded that they didn't do that. It may not have crashed as much, or they would have been able to stop this whole ordeal. But yeah, I also wish I would have able to short it. But I didn't do that either. So
no, there was a few people that made the good choice there, for real. Yeah. So the Wax DeFi that we talked about before. If anyone don't know, like you get a portion of all the NFT trades on the Wax blockchain, regardless of which marketplace it is, which is really awesome because you kind of own a portion of the NFT space on an entire blockchain, and one of the most active NFT blockchains, at least top 5, probably top 3 depending on when you look at it. And that is awesome. And you said that you like it. I like the idea of that part, and I am unsure what I think about that. The DeFi model is on Ethereum to reach the Ethereum ecosystems, as it's a bigger fund. Like there's more money on Ethereum than on any other blockchain. Do you think we will see more DeFi project that actually base their reward on actual value?
You mean like a similar model that gives out rewards in Ethereum or other blue chip
exactly token? It could be in so many ways, and I don't know, it quickly kind of becomes a security, I guess.
I mean, that's what LuxRare is doing. So you stake Lux and you get Ethereum. Yeah. And this Ethereum comes from the fees from the marketplace. And
yeah, like NFTblocks is doing on Wax as well.
So this is a good model because you're going to be giving out something of value. So a lot of other platforms like give out their own token or some farm token. Like, I don't want that. I know it's going to be going to zero or it's going to be going gradually down. Ethereum is, especially when the merge happens, it's going to be, as the ETH guys say, ultrasound money. So it's definitely a very, very good asset to hold because of its deflating mechanisms.
So are you convinced that the move to proof of stake will have a positive impact?
Well, I mean, this update, I mean, I have done a couple of videos about it. People can find it on the channel where I've broken down everything, my price prediction and everything. The fundamental problem with proof of work is this. So some people say that proof of work is fundamentally more, what's the word? It supports meritocracy or something. But that's just not true because fundamentally, the electricity cost on every single country is different. I'm paying 13 cents per kilowatt, and people in like Uzbekistan are paying 1 cent. They're paying 10 times less the electricity cost than I am on that electricity. Now, also, 98% of all ASIC machines, GPUs, and CPUs are all manufactured in China or in Taiwan. When we Europeans want to buy something of an ASIC machine, it has to be shipped from China, or you have to buy from a local retailer which has a more premium price. Whatever the option you have, you're either going to be paying the premium price on that ASIC machine, or you're going to be basically paying the VAT for importing it over to your country. Now, somebody from Mongolia, which has 4 cents per kilowatt electricity cost, can just they can rent a car, go to China, buy the ASICs, and come back, and then just start mining. So mining, this idea with Bitcoin maximalists always tell you, mining is not like this perfect equal outcome type of a thing. There's so much regulation stuff and bans that obviously can happen in the future. I think it's becoming more alarming that European Union might take some action against proof of work. That's why you also don't want to be on the boat. Me and you understand that there's a huge, especially we, because we're Scandinavian, every Finnish party in the parliament and outside the parliament, literally the Nazi party in this country, all are pro-nature. They are all pro-environment. To what extent obviously differs, but none of them want to actually destroy the nature. And that's a very a Scandinavian trait. And obviously also in Europe, there's a much more bigger, greener wave than it is in America or Canada, for instance. The Democrats don't really care about the green stuff as much as the Europeans do. We even import trash to Sweden. Yeah. So what I'm saying is that the Americans who are kind of leading this sort of crypto discussion in general here in the West is that they don't have that frame of reference here. They don't understand that the European Union might act upon proof of work is kind of likely. It's going to be happening in some form in the next 5 years, I bet. So
but it's already started.
Yeah. And so being in the proof of work bandwagon is not the play towards future. Now, proof of stake has its problems, and I always been fascinated by proof of capacity. That's what the Filecoin uses. and some other coins where you basically mine with your hardware, hard disks, with your storage space. And that is not only more electricity efficient, and also, storage things and storage units are a lot more cheaper, affordable, so more people can get in versus like GPUs and CPUs, which may cost a bit more. So I'm kind of on, I like the POC concept, but the problem is that when I've looked into Filecoin, when I've looked into Chia, when I've looked into Burstcoin, all of these popular POC things, they tend to have pretty high requirements to start mining. So you actually need also like RAM, and you need like CPU power and everything. It's not just like plug in your hard drive and start mining, sadly. And once it gets to that position, it can become quite interesting and lucrative opportunity.
And I think Shia destroyed so many hard drives in data centers, so you're actually banned from running Shia nodes on Hetchner and places like that.
No, really?
Yeah, because there is such a high IOPS on the drive, so they just break.
So as you can see, that the technology on the proof of capacity or proof of storage is not quite there yet. Maybe in the future it will be. Also in the future, we might see proof of bandwidth, proof of internet. There might be some other ways, but I just fundamentally don't think that the proof of work is the way to go in the future. I made a prediction, and I made also a tweet. I can't pull it up right now, but I think back in 2018, there was around 29 proof of work coins in top 100. Right now, there is 9. Ethereum transitioning into proof of stake. Dogecoin also entertaining the idea. And now most recently, Zcash has also talked about going into proof of stake. So fundamentally, the proof of work movement is going down and down. And so basically in the future, only things that are going to be left is Bitcoin, Bitcoin Cash, and Bitcoin SV in the top 100, in my opinion. And maybe Dash, but also Dash is partially masternode. So
yeah,
who knows if they're going to be going into proof of stake at some point.
And what's your take on delegated proof of stake? Like Solana and Wax and EOS and Proton.
I don't
Ultra.
think Solana uses proof of history, but DPoS is probably the best right now we have.
It's like a middle ground. Like it depends on what you want to do, but on the environment, it's very good. You only use normal rack servers, and you don't need a lot of them. And sure, it's not for everyone. Everyone can't run those nodes, but you don't need a super big investment to do it, which is cool.
So I really like DPoS because it has two things over POS that makes it really good. For example, Cardano's way is that once your pool becomes too big, it will have diminishing returns, which kind of like creates this fundamental incentive to become more decentralized. That's something that the EOSCO chains don't use, but that's one of the things I like about Cardano. Now, Cardano has a lot of other problems, but let's not talk about those. The good thing about DPoS is that you allocate funds to a certain delegate, and the delegate obviously gets money by being a delegate, and they can use that money to build out things like dApps, give funds, give grants, and these types of things in the ecosystem. That's why DPoS is very powerful, because you have this inherent building mechanism. However, obviously, in the beginning, you're probably going to be having really, really bad delegators, which are not providing any value or not building anything. So the list is obviously going to be changing a lot through time. But then you obviously have cases like Tron, where Justin Sun has basically added out half of the 24 super delegates are owned by him and by proxy.
Isn't that a good thing?
No, it's not. But Tron is like Tron is an absolute mess, and I don't know why people still use it outside from the fees. But I mean,
I use
because
it to
it's
send
made by Asian.
USDT.
I mean, just because it's made by Asian, I guess that's enough for Asians to basically use it. But that's so yeah, I like the super delicate model. It allows you to do a lot of things, but you have to have very competent people becoming those delegates so they can actually provide value. And if people are not demanding, it's kind of like they are kind of form of politicians. They have to offer things for the people who vote for them. So long as there are people who are demanding these people to do stuff, and I guess this kind of goes into the block one thing that, you know, people voted for these delegates. There were a lot of like exchanges in that list. I think Huobi, Binance, and I guess we both could argue that they didn't really bring a lot of value into EOS.
No, like what happens there, my take is that there was a ruling constitution and it had flaws, and then they decided to update that by MSIG, which changed the rules, which made vote trading not illegal. So before that, you could punish a producer for vote trading. It was not, you could do it behind the back, but it was not legal to do according to on-chain rules. And when they removed that, after that, majority of all the small producers slowly got kicked further and further down. Like our team produced the first live block on the EOS blockchain mainnet. And right now we are barely getting paid, and we have been running full history since day one and providing a lot of hardware and activity there. And one thing that I really like about Wax, since they saw what happened and they said, we need another layer of governance in some way to ensure that those getting paid by the chain actually add value and don't just take value and pretty much just farm the chain as a liquidity pool. And they have this office that are people that are elected just to evaluate guilds, and they get part of the funds as well. So their job is to make sure that the team running the nodes are providing value, and if they are not, they are kicked out of payments. Do you think such like a governance layer is a good or a bad thing for a public blockchain?
I mean, having a people validating the actions of the delegators. I mean,
yeah, exactly. Validating the validators.
Yeah, you mean you have to have somebody has to watch over the watchman, or whatever is the term, you know. So you have to have checks and balances, like, but that trickles down into the real world. The moment the government has the power over the police and everything, like they can just shut down investigations and things like that. So you have to have elements there which allow to change the people at power or who are at charge. I mean, the thing about the DPoS model is that I would install that system into real politics, because the minute you start to fuck around or not bringing around the promises that you made on your election campaign, people can withdraw the votes.
Yeah.
And if you lose enough votes, you will be kicked out. Okay. And also your money will be tied into that thing. So that's what I like about the DPoS model in actual governmental system. I think it would work really well. It would bring out that liability to your work, and that's what we need more in real world, but also kind of like in crypto. Like,
are you saying that real world politics ain't perfect?
Yes. I'm saying that, yeah.
I mean, the Finnish prime minister seems to be way better than many, just because she is younger and seemed to actually be a real person and not just a manipulative psychopath trying to take power.
Are you joking around right now? There was just a video yesterday.
She was out drinking.
No, she was partying, and they had this word. I don't know how I should. they were chanting this word in the video, and it roughly translates to powder gang. And I think that has been a reference to fucking doing cocaine. And there was a line of cocaine in one of the videos. If you still it down in the counter, there's a line of cocaine.
So this
line
is
of
the
white
Finnish
stuff,
prime minister.
Yeah. So I think, she has been doing some hard drugs and stuff like that. So and
so
the
way
problem
more
also
fun.
that she went to look. There's a difference between like when you're told that you are when the doctor tells you should be in current quarantine, and then you go the same day to actually party in a club. That was when the first scandal came, and so like you have to kind of stand by your lifestyle. I think that's what being based is. That like if you do coke, at least be honest about it. But like I just she gives a very political answers after Nanada. I don't. And the only reason she is the prime minister because the previous one fucked up so bad that they had a vote of confidence and kicked him out, and she became basically his replacement.
It's actually refreshing to see that type of problem in politics. It's
I
at
guess
a better
in a way.
scale. But yeah, so we kind of lost the track of the crypto and NFT topic there a little bit, but it's fun. And so yesterday, I think you put up a new video on NFT chains launching in 22 and 23. What kind of
not NFT chains?
No, blockchains. Sorry,
Blockchains.
yeah, new chains. It's just I used the wrong word. New chains launching. So what's interesting that is coming?
So there's a lot of so I don't know how closely have followed the Tornado Cash stuff.
No.
Are you?
No.
Okay,
if it has something called cash, if like, okay, I know that Tornado Cash and the sanctions are scary, and there are two pools of people that think those sanctions are good, and those that thinks they are bad, and that's about as much as I've followed it.
Okay, maybe I do a quick TLDR for the viewers.
Yeah.
So basically, Tornado Cash is a mixer site, a smart contract where you can send Ethereum and then it sends out the Ethereum to another address and kind of masking it in a way that you don't exactly know who sent money to who. Now, this was problematic. So basically, GitHub closed down the GitHub repo. And there was obviously debate from the OG developer that, okay, this is not very decentralized. Well, I criticized also why are we using GitHub because this is a centralized entity. yeah, and also like I remember GitHub also closed like some Microsoft stuff because they were supporting ICE. So there was a lot of like political mumbo jumbo going on GitHub. So that's not good. And basically, another developer was arrested who was in Netherlands.
Yeah. And
basically the Fed, or I don't know what's the entity, IRS, I guess,
the abbreviation.
said that, yeah. So they said that any person that has received money from the Tornado Cash is now automatically blacklisted. So some person then went to meme and send money through Tornado Cash into Kanye West, Trump,
like pretty much all public people.
Yeah. And now they're kind of like seeing that will that have any impact on this matter? Because that's the fundamental problem with blockchain is that you can receive transactions even if you don't want them. Yeah. So somebody might like actually send you an airdrop which you didn't want to receive for taxation reasons, but you still probably have to pay the taxes for that, despite you didn't want the airdrop. Now that could be that's a very rare case what I laid out there, but fundamentally like that's kind of like one of the problems.
Some countries treat that better though. Like Sweden treats that okay.
Yeah. And so basically basically now Tornado Cash, like a lot of these things were shut down, and obviously there are some other privacy entities right now building on Ethereum, which might be in danger as well. And that's something I touched upon on this recent video, where I talked about a couple of new layer 2s which are working on privacy solutions for Ethereum. And there's like 17 different chains on that video. Some of them are there's almost like 5 privacy ones. So there's a lot of privacy protocols being built on Ethereum right now. There seems to be a very big interest, at least from the developer side of things. And there is also some other blockchains which could be the next Solana, for instance. But it's hard to like evaluate these because I'm not like a developer. I can't tell you, is this way to like scale the chain or. And there's a one project which you could bring up on the screen called Humanoid.
Humanoid.
Not node.
Are they linked
node.
in your video?
Yes, it is there.
I will find it then. Yeah, I will pick it up in a second. I found it. I'll pause the game. I don't die. What is Humanoid?
So this is like what was it called? Like proof of liveliness or proof of. Scroll down a bit down there, yeah. Yeah, there, bit above. The 5th slide, or is it that 6th?
Biometric Sybil resistance. Is it that one?
This one. So here it kind of goes into like, so basically you're going to be doing some type of a biometric scan. So that is like basically your fingerprint. It can be your eye. It can be your face. And this will be like their new consensus model. So it's not exactly like a KYC, but it's like basically making something to prove you that you're a unique human type of a being.
Yeah.
So this one was probably the most interesting of the projects that I talked about here in this video. This is kind of like a part 2 video. There's a couple of other blockchains that are coming. One being called Aptos, which is the Facebook's project, which was shelved.
Yeah.
DM was the original. It's not on this list. It's go into the videos corner. There should be like a what's it called? The shout mark, the drop thing. The cards. The corner.
I don't see it. I'm blind.
Yeah, so it's in the corner of the actual video.
Oh. I never use cards. I don't know where to find them.
Top corner.
That one. This one.
Top, your bottom. There. That's the one.
Aptos.
So in the there should be Aptos, the first one.
Yeah. Fastest and most scalable layer 1 blockchain.
Yeah, so this is the ex-Facebook people. They currently actually have incentivized testnet for people who want to run a full node. They're going to be having 2-week test periods, and you're going to be getting 500 Aptos for running that 2 weeks. And then there's going to be a next phase again, which you're going to be paid for. Something to think about: Aptos has the same supply as Algorand, so 10 billion. So it could be anywhere from $187 to $1,000. That could be the valuation of 500 Aptos. Just throwing a number there. But if you're going to be doing
or 0,
yeah, I mean it's hard to say like what is going to be the valuation of this. But this is like a project that I'm interested in. And then there is Sui and what's the third one?
Whoa, they are trying to hire a lot of people.
Yeah, so if anybody has those talents, well, reach out to them, I guess. I mean, there are Yeah, Super Oracles is another one that I'm invested in, along with this Sui. So these could be like the next gen blockchain, so to speak, as the video kind of alludes to. So the next scalable solutions. But a lot of blockchains on their websites, they say, yeah, we can do 100,000
We are the
transactions per
best.
second.
Best, fastest, most secure.
Yeah, yeah. But usually they are lies or exaggerated, and like even Solana says that, but it kind of Solana also includes signing messages as transactions when they really are not. So it can be misleading marketing.
The Solana wallet that got they generated recovery phrases that you could guess or you could figure out. At least that's what it seemed to be. So people lost a lot of Solana funds, and that wallet that seemed to be the one stated that they were the most secure wallet on Solana, which is funny.
Yeah, I lost $10 on that hack, and yeah, Slope was mobile wallet, and it was really weird because my friend used another seed phrase that he generated with another wallet on Slope, yet he got hacked. I don't know how that happened, but I guess it sends out the transaction when you insert the seed phrase or something, which seems even worse. But yeah, it's hard to validate the security of any wallet, to be honest, like how they are keeping your seed. And I always wondered about that in the past, like how exactly the seed is generated. Is it actually done offline or online? So, and
they seem to have a
wallets,
log in clear text on the server for like monitoring purposes.
yeah,
that save the seed phrases.
So yeah, that you got to be kind of careful, and that's why you should always have multiple different seed phrases. Don't just use a one on every wallet or every thing you use. So always create multiple, and that's what I've done.
Yeah, split your funds. It's the best way.
Yes, you should have some in CeFi, some in DeFi, some in your own wallet, and some in exchanges.
Yeah, it's probably good. Do you, like in Europe right now, they are working towards a forced KYC on all wallets that has interacted with your wallet. So for you to deposit funds into an exchange, they want proof on who is behind every transaction to your wallet through their KYC layer. Do you think they will manage to actually execute that? B, how do you think they will manage to secure that data?
Do you mean by has this law already passed, or is it in a proposition?
I'm not 100% sure. I think it passed the first step. I'm not sure if it actually mean it's going to happen, but then it's a few years for them to actually finalize things, if I recall correctly.
Well, this is what I gotta say, that unlike in the very first Bitcoin cycle, that's when people got really lucky because people got in the beginning and there was no taxes on your crypto winnings. There was no KYC. And yeah, it was probably harder to turn it into cash, obviously, but fundamentally, like going into the next cycle, we can expect, very hard regulation, very hard taxing. So if you can like exit within this, well, it's kind of hard to say, is this cycle over? Like, how actually are we going? But like, I would put a personal goal for everybody, or recommend a personal goal to exit from the markets within 5 years. Now, you don't need to do the KYCs if you're just going to be using crypto. If you're not going to be exiting with your crypto. So if you're going to be just using it on retail or other services, it's not really a problem, is it? So I think the crypto community has to build more retail adoption where we can use that money to whatever is buying luxury goods like watches or something, or gold.
And the reason you say that is because it will be harder to move funds in and out, or why is that?
Well, I think nobody wants to go through the process of like all the paperwork, like paying taxes and everything.
Like
so
I do.
I mean, yeah. Like if this law would pass, and they would say like, oh, we need to KYC all the people who have sent you money. Like, there's no way I can do that. Like, I would rather just take the bill. What is not? It's the sanction bill. What is it called?
I don't know.
When you pay, you have to pay damages. You know,
Okay.
what was it? So I would rather just pay the fee. Like, even like getting all the taxation data today, like if my tax office would ask me to provide more information, I would just take the fine, because I'm just not going to I don't want to deal with that amount of transactions and history that has happened in million blockchains. Like, they don't even understand what they're exactly asking, like how much data. Like, how, like your typical tax office, like, there's no way that they have the time to go through all of that data for every single customer or something, you know. That's a lot of things, you know, a lot of transactions in a Wax account, for example. I mean, you know that probably better than all, because you have done so many microtransactions there.
Yes.
There must be tens of thousands of them. It's not like Ethereum
2 million
where there's
transactions.
So it's just insane to ask people to do it, you know. I guess the people just have to show the European Union or the whatever is in charge of the taxation stuff that this is just an insane request, and it makes no sense whatsoever, because you might have also transactions which you have no memory of who sent it to you, or where did you send it this to, and there might be exchanges which have gone defunct where you have interacted with, and they're no longer to be seen, and they were never transparent in the first place. Tracking down those people is probably impossible.
Yeah, it's a lot of problems that I don't think they will be able to solve. But what I'm scared of is that for that to work, they need to have some kind of communication between all governments and all fiat on and off ramps, because those are the ones that will be forced to do this. And I don't know how they can safely send that data to so many parts and take data from so many parts without risking major leakage of very sensitive information, like people's finances and personal addresses and names. And like, take Ukraine, for example. A lot of people donated funds to the at the start of the Ukraine war for them to buy weapons and things. And Russia could request this information, not right now, but in the future they could, if they wanted, and get the information of everyone that interacted with that donation, and they can just go and after them in the future. Every Russian citizen. Like, that's just one clear example of when it can go really south, to have all the requirements to have this info and share them with everyone. It is very scary, potentially.
Yeah, and it's not just crypto exchanges. Like, my bank asked for additional KYC information just a week ago. I was playing on a poker site. They asked me to do KYC. So it's not just crypto. They're really getting tight on everything that has to do with money or depositing money somewhere to some type of accounts. And it's just a sad fate of Europe, which is more and more regulation, more and more paperwork.
Yeah.
And we need to move away from that type of society fundamentally. And I don't think that will happen unless people start exiting from the European Union. I don't think European Union is going to be able to just do 180 and go more for, laissez-faire libertarian type of system where everything is like super easy.
Do you think that will happen?
What will happen?
More countries leaving
Well, I think, it's definitely on the table. I don't know exactly what country is most likely to leave right now. I would probably say Hungary or Poland, but they need Europe's money. So they're not like financially independent enough to leave. And I think it's not like totally out of question because they're doing all of these supermassive laws right now, which are very authoritarian, and there are people who are fundamentally not fond of that. So you can find, 10-15% anti-EU people probably in a lot of European countries, but you still need like have a majority within the country to basically start acting something like that. But if the euro goes through a massive hyperinflation, that could certainly help that to happen. But there are countries like I'm not very positive that things will become better in Finland just because we leave from European Union. There's still going to be idiots in charge who are going to be still keeping very same idiotic laws intact. So I think it's a really case-by-case basis. I mean, Estonia, for example, they wanted to do their own national currency, by the way, in crypto back in the day, but the European Union said no. So Estonia could be probably one of those examples which definitely would go less regulatory route. And I think a lot of the regulations that they have personally implemented in the recent past has been due to the pressure of European Union.
Yeah. They are Estonia is doing a lot of interesting things with bringing businesses to Estonia. Low taxes and easy to sign up means a lot of people are starting businesses there. That's cool. But honestly, we have been chit-chatting about crypto, NFTs, blockchains, and all related to that for a very long time now. I feel like it's about time to wrap up. It was very fun to have you on and chit-chat about all of this. And for anyone that wants to find you, there's a link below to your YouTube. And on your YouTube, you have links to Discord and Twitter and everything. So people can find you.
Almost everything. I did recently, actually yesterday, I opened a TikTok channel. So there's no videos there yet.
Are you dancing?
No, I'm not dancing. It's probably going to be low quality videos, me recording with my phone, my computer screen, and ranting about something. Who knows? I mean, I will have to, but TikTok YouTube is a very censorship heavy platform. And I was in a 2-week ban actually in end of July.
Yeah.
So if you actually go through, temporary bans on YouTube, it's going to have like a very big impact on your growth, because if YouTube sees that you're not uploading, then it's going to be recommending you less and less on the charts and stuff. So YouTube has become a bit of a mess. Also, I do want to plug in that I'm releasing an NFT collection on Monday with a couple of friends of mine. It's going to be free mint.
On what platform?
What? Ethereum. Yeah. It's called The Wages. You can find it on Twitter, T Wages.
Have you retweeted it on your...
Let me link it to you.
Yeah. There, I found it.
Yeah, so it's basically a fast food style. It's just
so bear market jobs.
Yeah. Not supermarket job, but fast food job. But actually, we probably should have added something supermarket stuff. But yeah, it's kind of like a dedication to this bear market, and people going back to work at McDonald's, because we're all going to be poor, and we're not going to make it.
So free mint, that means on Ethereum that the user paid the gas fee but does not pay for the NFT.
Yeah. So it's going to be, when I tested it, it was $7 basically to mint, depending on what is going to be the gas. And obviously you can adjust when you push the mint button. You can always adjust the gas, and you can set it out to a low amount. I mean, long as they're not selling out in a minute or something, you can put out a low way cost, like 9 Gwei or something, and it will confirm within 24 hours or whenever the gas drops down. Usually in European mornings, for example, are rather cheap compared to the European evening, for example.
You had food deliver. What is this?
Yeah, okay, that's a broken link. That's actually came with the template, but it's just a meme collection, guys. It's nothing like super serious, but it's just there. You know, it's a free
fun.
mint.
For
Just
fun.
for
And you
fun.
said Monday?
Yeah, Monday,
So 29th?
21st.
Oh, the 22nd then. Yeah?
No, it's 19th. You said 28th
Oh, yeah.
just a minute ago. I said
21st
no,
is
no,
on
no,
Sunday.
no, yeah.
You said Monday.
Sorry. Yes, Monday, exactly. Monday, 22nd.
Cool.
1919 is the date. That is when the first fast food restaurant was ever opened.
1990. Cool.
Yeah, that was in America. White Castle, I think, was the first.
The Trip to White Castle. Have you seen that movie? It's a bad comedy.
Is that the Martin Lawrence movie where he goes back in time?
I haven't seen it.
I think that's
for a
called
long
Black
time.
Knight.
Yeah.
I've never been into White Castle though. I never eaten.
Yeah, there is a bad comedy where two guys are the entire movie they are trying to get to the White Castle to get a burger. That's the entire movie. But anyway, really cool that you joined. Nice chat, nice chill conversation. That's awesome.
Yeah, hopefully we can do this again at some time.
Yeah. And as I said before, you find link to LiteLiger in the description below. And yeah, keep up. I have a bunch of booked interviews and different low-key live streams with people in the field in the coming weeks. So check that out. Peace.
Bitcoin bull is all I got left. Sold my clothes, gold no less. Was a suckling, hollow hands. This man's stronger than the average man. I'm not the bubble, I'm the pin. I'm not the bubble, I'm the pin. I'm not the bubble, I'm the pin. I'm not the bubble, I'm not the bubble. Day the markets take another dip to restart and refuel this moon boy ship. My dreams may be futile, but it's you say, well, my